Great. I think that's everyone. Thanks for joining. We'll let you know. So Arcady, you can kick us off with your intro and take us through the discussion, and just cue me for the polling questions when you pop them up there.
Thank you, Rob. Just want to hello to Kevin. It's like a small world with a company you just mentioned. I know Eric from Bankable, Serge from Yellow Paper, and the two of us too. So there are a lot of animals outside, different kind of animals. So thank you for everyone being here. Just to present myself. It's nice that you presented yourself, so I will present myself too. I have some gray hair. Doesn't look like, but it's true, unfortunately. I'm originally from Europe, France to be more precise. Good food, by the way, if you don't know France. Based in New York for a decade, in the industry banking / fintech for over 2 decades. I'm sure you all of you heard about Chime, Revolut, N26. So today you call them Challenger Bank, but that's not new. 3 decades ago, it was called web banking. 2 decades ago, it was called digital bank. Today, it's called Challenger Bank. In 10 years, there will be another name. So I was one of them. So 2 decades ago, I was part of a founding and management team. We started as an online broker like a Fidelity, E-Trade, Schwab, and then we expanded into a full digital bank. So today you would call it Challenger Bank. I will just focus on one number to give you an idea about where I'm coming from versus the market of today. Chime, 13 million end users. They're losing $100 million a year, subsidized by VCs. If they have $5 billion of deposit, that will be amazing. So that's 3 numbers that I provided. So the online bank that I've as part of the funding and management team, it's Fortuneo Bank. That was back in 2000. We were seeded by VC and one of the biggest insurance company in Europe, Aviva. We were funded and seeded $30 million. That was back in 2000. Within 4 years, we made it profitable. Within 6 years, we made an exit. And when I resigned in 2008, once I secured the merger, we had in our books 20 billion euro asset client, just to put in perspective. And today, the company Fortuneo Bank still exists 2 decades after, and it's one of the largest in Europe. And today, it's 30 billion euro, which is approximately $40 billion client asset. At the same time, we built a predecessor of bank as a service. It was brokerage custody as a service, and then we did bank as a service in Europe. It was called Pro Capital, and we did massive core conversion. Deutsche Bank, Merrill Lynch, UBS in Europe, and we grew. It was a sister company at the same time of Fortuneo Bank, and we grew it to over 50 billion client asset under custody within 8 years. So that's me. In the past of these years, I was a mentor advisor of several US, Canadian, Israeli fintech, and also, even if I'm in New York for a decade, one of the venture partner of one of the biggest European fintech firm, which is Blackfin. So that's me as a person. You all know what's happening in the US. There's a digital banking boom, Challenger banking boom, and every month you have a new player launching. This is just the next one. There are many more players than that. What's happening, it's like the first one that started a decade ago are already closing the B2C part. Moven is moving to B2B, but they're closing. And a lot of Challenger Bank, that's the history. It happens 2 decades ago. It's the same history. Not everybody is going to be a winner. Some of them are just expanding. They're raising at valuation, which I think outrageous when you take a look at the underlying metrics. Recently, Greenlight closed at 2.2 billion. Current closed at approximately the same number. Step closed at 1.2. It's just amazing numbers. So who is really growing on the market? So if you take, everybody's talking about Challenger Bank, their market share is expanding. But if you take a look about the entire market, this is not digital onboarding. This is overall checking account opening. The real winners are the big one: Chase, Bank of America, Citi, Wells Fargo. Digital bank, Challenger Bank are expanding. The big losers are credit union and community bank, huge losers. And this is not online, this is overall checking account opening. If you take a look to the challenger bank, everybody's talking about Chime, which is a clear winner. I think the real winner, some of them are calling them a super app or a challenger bank. I think there would be a challenger bank, is Square. Square for me is already what a year ago is going to be the main winner. But let's assume Chime. You see that there's a big gap between Chime and the others. As of today, it's 20 million. So Rob, I would like to make a quick survey. There will be 2 surveys during this webinar of today. Can you shoot the first question, please?
Sure.
So the first question for all of you, it's like, do you think that challenger banks are going to take over legacy banks, Chase, Bank of America, community banks, region? Basically, the question is, do you think that the future tomorrow is challenger banks? Yes or no? We'll give like 10 more seconds for the answer. Rob, can you display?
All right, let's see. Okay. You can see the results at this point.
Wow, that's good. You're good. Yeah, you're not. When I say you're good, you're not mainstream. You're not like the analyst or certain media influencers. That's good. That's good. I like it. So this is a projection between today and in 5 years. So what you see, it's like a neobank, a challenger bank, looking to explode to go to over 40 million account orders, to go to over kind of make let's fund it to 15% of a market share. So, and everybody, if you read the media, the analyst, the influencer, they're saying they're going to take over. This graph is saying something else. But the reality is, aside these numbers, it's by 2025, 85% of the population will still be with legacy and credit union community banks. As of today, 5,000 community banks, over 5,000 credit union, and all of them, I'm talking about credit union community bank, they hold 5.6 trillion deposits, Chase 2.8. So let's stay today in 2020. Challenger banks, how many divisions has the Pope, as Stalin was saying about Vatican back in the 50s? There's no real number out of the market regarding how much deposit hold Challenger bank. It's probably more than a low single digit. I would say between 10 to 15 if I want to be very large. But the reality is, Challenger bank, they grab users, not clients, but not the deposit. And by definition, they cannot. There's no growth there. And that's official statistic. So now you're a traditional bank. I'm not talking about Chase, Bank of America, Citibank, all of them. This big one, they spend billions of dollars. To be more precise, each of them is spending $3 billion on the IT R&D budget, each of them. At the same time, if you take Jack Henry, FIS, and Fiserv, the 3 of them combined are spending less than $3 billion, and that's not innovation, that's mostly renovation. So you're a traditional bank, you see this challenger bank, what do? You call with your legacy core provider. Is the technology there? Is the system flexible? What will be the pricing for any upgrade? Are you looking to convert to a new core provider? That's a new trend. The last few years, there are new players launching by saying, we're going to replace your core banking platform. So now we're going to do a second survey. What do you think, Rob? Yep.
Yeah,
Do you think that bank are already replacing, or they're going to replace in the near term their core with new providers? I'm sure again you're going to be contrarian to all the media, the journalists, and the analysts. Rob, you can display the answer.
All right, bit of a toss-up.
That's surprising. That's surprising. So The mainstream is saying that, yes, they're already replacing and they're going to accelerate in their digital transformation by saying replacing. So 72% of banks are saying they're not looking to, this is not intention. That doesn't mean they're going to do or not, that's just the intention. 72% saying, no, we don't intend. 14%, they don't know. 14, yes. There's a big difference between intention and action. What's happening is this was the US core banking market share back in 2019. So you see, it's like the other, and when it's listed the other, it's not the brand new one, because the brand new one started like 2 years ago. That was the alternative core banking platform. It was like Temenos, it was players like that, or in-house mutual shared core banking platform by a few credit union. It was 17%. Today, the reality is legacy core banking platform are even increasing their market share, and new core banking platform are losing market share as an overall. So there's a huge myth about core banking conversion. That's not happening. I was myself a core banking conversion, and I did at a very large scale based on the numbers I provided you. But it's not happening. Maybe in 10 years, but it's not happening. So there's a new way for banks. That's the good news. It's not they have to stay or they have to leave. They can stay with their core, and they need what is called today, and that's what Agora is about, modular banking. That means it's a new technology platform based on microservices, leveraging cloud. It's like a Lego box. That means you're taking individual features, you're bundling them, and you create your own product, basically. And there are new players like that. I can show a few names because I'm not like saying there's us and there's no one else. Membu is one of his players. Agora is one of his players, of course. Finax, it's not clear for myself, but I will mention them. All the others, they're not there. Just to be clear, it's like they're now built on microservices, leveraging cloud, and more or less, then I will say us versus the others. Everybody, what they do, it's they take a look at what exists, they leverage and deploy new technology, but to redo what existed before. And that's not what is modular banking. Modular banking, it's not to replace what exists, but to enhance with and to allow to make new products, not digital banking, but challenger bank technology. So basically, when you say core banking platform, it will be about ledgering, card issuance, but today it's much more than that today. If you want to, all these credit union community banks, if they want to enhance, if they want to compete with retail players that are coming like Walmart or Square, etc., they need to have additional sets of features embedded into core banking platform, modular banking, etc. So, for example, this is not final. This is just an indication about what kind of features they can find in-house in a good modular banking platform. It's know your compliance, know your business capabilities, connection to the payment rails, card issuance, plastic virtual, a rewards platform, mobile point of sales, FX, benefits, etc., etc. So this is today. So I'm positioning it on the embedded fintech, and there's another version which is called embedded finance, which is basically you bring banking technology to non-banking players. So what I'm mentioning here, it's more like on a embedded fintech, which is fintech brought to the banks. As I say, this is the real market today. So by leveraging modular banking, what could be the development paths of traditional banks? They have three ways they can do it. One is they need to go fast back to the market to be able to compete with Greenlight, with Step, with Current, with Brex, with Revolut, or even Square. So they don't have time to build single features or to build a complete bank. They can just take pre-packaged product. As of today, I just want to make it clear, we're the only one in the market today to be able to do that. Basically, what does it mean? It's a bank, subscribe, a digital bank, which can be deployed in few weeks, that can compete with these big players, compete or even be better. Option 2 as a development paths is it's not a prepackaged. They're looking for their own certain niche. I'm talking about credit union community banks, their own niche. They need to have certain products, certain features tailored built to them. It's called single features, or you build your own Lego. So for example, they want to have something tailored on the digital issuance of a card, on the rewards program, on the crypto, FX, lending, card controls. It's basically, it's single features. Option 3, which is going to happen, I believe, not this year, maybe end of next year. There was also a myth that credit union community banks are going to launch standalone digital bank with a new brand. Few of them, 2, 3 tried. It's complicated. So what I believe is going to happen, it's like they're going to launch new complete digital product, not product, but banks, and they're going to switch existing client to this platform. And I believe that it's going to happen in not this year, but maybe end of next year as a move. And that's a new development paths that can be offered by modular banking. So just a brief description about Agora, what we are, and I will show you what is a prepackaged product. So I'm using the US mindset. Everything is the best hot dog in New York, the best omelette, everything. So I'm sticking to this. We are the most advanced bank as a service provider, but it's not just marketing. I will explain why we're the most advanced. We're positioning ourselves for tier 2 banks, credit union and below. We're not looking to work with, not because we want to be humble. We're not looking to work with Chase, Bank of America, Citi. It's their big organization. Everything takes time, and they can develop everything in-house. That doesn't mean it's going to be good, but they can develop everything in-house. We're looking to serve mainstream banks and credit union. The one that they don't have a budget. Not everybody has the digital banking knowledge, and we're coming with it. So we are part of MasterCard Starpath. We were selected by the ICBA for the accelerator, and the ICBA is one of my early investors. And last summer we did the accelerator backed by Fiserv. So one very key thing, us versus the others, we're not here to compete with legacy core. We don't aim to replace them. We're looking to work with them. And it's not fully official, but it's half official. If you go to Finaster website, you will find our pre-packaged product available for their clients. So we're going to do a press release in the next few weeks, I guess so. But if you go to Finaster website, happy the teen product is already live, and the SMB should be in the next coming weeks. So just a zoom about what I called a pre-packaged digital bank. So I'm sure all of you have heard about Greenlight, Step, Current, Brex, Revolut. Revolut is on the teen and the SMB side. So we have built from scratch 2 digital bank for the segment of teen segment and small medium business. And it's not just a front end. Everything is working on our API, on our backend technology. And to give you an idea about where do we stand versus this kind of players, which are $1 billion valuation, FinTech, B2C FinTech. So Greenlight, I'm not talking about the investment part, I'm talking just about the checking account. This is what we do, this is what they do. And we built our platform based on 2 things. One, of course, is our technology, but 2, our understanding of the market. And 3, we're kind of mission driven because our clients are credit union community bank. They don't have the same strategy and roadmap that a FinTech. Their roadmap is to serve their client, their members, and to provide an holistic view. So that's why you will see such a difference between what we do versus Greenlight. So for example, virtual card, it's not Apple Pay or Google Pay, which is a separate thing. It's a separate card, which is just virtual. So we have a technology. We're also embedding a rewards program for the end user. saving account, etc., etc. So this is on the Tin account. So we're not just coming by a front end, but a complete holistic view, holistic product with additional features. Same thing on the SMB. There's many more players than that, but just to give you an idea, there's Brex. You heard about them. There's $7 billion valuation fintech today. You have Lily, amazing company. Lily, they raised the last month an additional round of 55 million, and Bank Novo, which is a older player. So this is what they do. This is what we do, and we're coming with a innovative product. So, for example, a product that we're going to launch is we're going to embed on the SMB small medium business account. We're going to embed a feature which is going to be a mix of buy now pay later with salary advance. Very important thing in our construct versus the other players. We're not a B2C player. We're a pure B2B, bank as a service, but we're coming on one side with a BIN sponsor, which is we're going to do a press release in July about it, but if you look on the internet, you may find who he is. It's a regional bank. So on one side, our BIN sponsor, of course, is a bank regulated, but our clients are not fintech. Our clients are credit union community banks. So they're also regulated. So that's why our entire construct is not a prepaid, it's a full checking account, and we can come with all the services. So if you take a look at all the fintech, they're all limited. None of them can do lending. So that's why, so we're going to be able through our platform to do lending, but with new products. So there's a boom today on buy now pay later, which is on the after payment, basically. We're going to bring it back to the bank at the checking account level. I'm not going to elaborate because it's a new innovative product we're going to launch. So very high level, this is what Agora is doing. I don't know, we can do, I think, a Q&A session. What do you think, Rob?
Sure, absolutely. By the way, Bank Novo is my neighbor on this floor here, down here at Rise.
That's good.
Although, of course, I haven't met them because they haven't been here. So, but their office is still there. Great. So yeah, let's open it up. Anyone have a question they'd like to ask Arcady? I mean, I'll maybe start things off. You know, it was interesting, the information you showed, Arcady, on the new account. I think that was new account openings, right? So yeah, it looks like the challenger banks are picking up 18% of new account openings, and clearly, well, credit unions have a little bit of a blip up, but certainly credit unions and community banks have suffered a bit. So, you know, it does seem that the smooth new interface, the features are making a difference, but is it also because are they scooping up the demographic that's creating new accounts at a greater pace because of those features? And I guess I'm a little bit surprised that the mega banks are doing so well, because their interfaces are, you know, from what I can see, their interfaces are really not keeping up quite as well.
So very important, this graph is not about digital, it's overall. So it's true that last year with the COVID, branches were closed, so things have changed. So you're right, the big one, the online onboarding it's not good. The challenger bank, it's good. Credit union community bank, they're very far from it. So right now it's like, if you go to the ICBA website, representing the community bank, they just create a directory of banks, community banks that open, that allows online onboarding. So go to the ICBA, take a look at, they're just starting this directory. And I just want to make it clear. There's a difference between online onboarding and, and fully digital onboarding. So there's a big word about it. So it's like, is the entire process digital? Do you need to send documents? Do you need to send by mail documents? Is it open in real time? So there's a lot of, it's a gray zone. So what I can tell you, because we announced that this week we did a press release, we're launching, we announced that we're launching, that's part of our offering, a challenger bank like digital onboarding. That means it's fully digital, fully through the app, and in less than 2 minutes, your account is open and all the controls. And not only that, instantly we're issuing virtual cards. So it's like you take your phone, you do the online onboarding, we scan your driving license, your ID, we ask you a few questions, we check in real time your data, you fund your account, and in right away, for example, the team, you have a virtual card and you don't have to wait for the plastic card and everything, and same thing on the SMB. So that's going to be a game changer. I'm not talking about offering. I'm just saying that the game changer is going to be acceleration of the digital onboarding and real, fully digital onboarding in real time. So I think there's going to be what you see here in the statistic. There's going to be a change. And once again, credit union community bank are going to be, unfortunately, I'm saying that really not with irony. I really believe it, unfortunately, because they're the backbone of the economy. They're the one, if you take a look at the PPP plan, they're the one who were funding it, providing it, relaying it. And mega bank were putting themselves on hold on that. They didn't want to do that. And the digital bank, they couldn't do it. So it's something really specific to the US. Credit union community bank, it's going to be complicated for the economy if their role is going down.
So would you see, I noticed your comment on, like the US, everything's the best, but, given your background and where you come from and your success in the past, would you see something similar to this in Europe? And secondly, why does it seem Europe is so far ahead in fintech? Is it mostly a favorable regulatory regime, or what do you think is driving all that?
So I'm going to say kind of a funny part. So the chip on the card, everybody has today a debit card or credit card, and there's a chip on it. And this was enforced like 3 years ago. If you take a look about Europe, it exists already for 3 decades. When I was not with my gray hair, I was fully blonde and svelte, athletic, whatever, and single, anything Candice, I was already having my debit card with a chip, and it was chip using a PIN code. Now, if you're for those who are in New York City, and before COVID, and even today, if you're going to Grand Central, you want to pay with your card, and you put the PIN, they put a tape, so you can even put the chip. And if you doing any transaction, mostly you're not asked about the PIN. So what I'm saying, it's like there's not a legacy only on the core banking. There's a legacy in the habits of the end users. But now coming back to your question, which is why Europe is ahead. So when I was a child, coming here early 80s, I was like always opening my eyes by saying, wow, this technology, why the bank? Today it's the opposite. And it's not because Europeans are smarter, education, or because there's more open banking. It's just because regulation was, they opened the vault. That was back in the 90s. It started back in the 90s and it accelerated a few years ago with open banking. So there's open from the regulation. Competition is more open. There's less players, but the competition is more aggressive than here. And 3 lobby that protect the end user are more aggressive in Europe than here. Here, when you take a look at litigations, the fines are higher, but in reality there's the end users are more driving the change also in Europe. So why Europe is ahead today? Because regulation, because competition, and indeed you have a digital wallet is expanding. And if you take a look about on checking account opening, today you have as more checking account open in Europe by challenger bank than legacy bank. So, but I just want to make it clear. It's not because it's a checking account is open with a challenger bank that it's a real customer. Very important. I call them users, not customers. So today, for example, there was N26 announced in Europe, but in France today, they have 2 million end users. Sorry, they call clients. So they announced this number, which is just amazing number. If you take a look at 2 million, it's like, wow. If you take a look at the US, they announced last year that they have it was back in I think no, it was 5 months ago in this in December they announced that they have 500,000 clients in the US, which is an amazing number for a European challenger bank launching in the US. Cornerstone Advisors made a study and they estimate that they have around 100,000 customers, 5 times less. So there's a big difference between numbers that are announced by all this challenger bank with the reality. Another example, Greenlight, which is today a $2.2 billion valuation, they have announced like 2 months ago, last month, that they have 3 million clients. They count as a client parents. So let's say you have 2 parents and a kid, they would count it as 3. At the end of the day, there's 1 account for the teen and 1 card for the teen. Just do the metric.
Yeah, so given that the challenger banks are driving, are kind of originating, in Europe, at least they have quite a head start. Is that kind of what this is based on? Is this driving your forecast of what happens? Because I'm curious to see what regional and smaller banks look like in Europe after, they're so far ahead.
So what happened in Europe, I'm not talking about the challenger bank wave, I'm talking about the digital bank wave.
Yeah.
All of the new digital bank that were launched early, mid-90s and early 2000, all of them were acquired by traditional banks, all of them, including me. We were bought by Crédit Mutuel Bank, which is one of the largest banks in Europe. Société Générale, they bought another one. BNP Paribas, they bought one in France and they bought one in Germany, and today they consolidated it. So all of them. So now looking at the challenger bank wave, all of them are here for the long run. They all say that. The reality is, at certain point, they will look to cash out, IPO, SPAC, that. Some of them will do that. I'm sure N26 right now is working on aggressively on an IPO or on a SPAC aggressively. Chime, they're working on it on an IPO. The main players are going to stay. That's a big difference between the last wave. So Chime is going to stay. Revolut, I think, is going to stay. N26, I don't know, honestly. So the difference is the main one are going to stay. The question is about the second tier challenger bank, the MoneyLion, etc. So MoneyLion did a SPAC, so lucky for them. Not everybody is going to be a winner. Our legacy bank going to buy them? I don't think so. I don't see Chase buying them. I see Chase or Goldman Sachs buying digital challenger bank outside of the US. So I wrote it a few months ago. I said Goldman Sachs or Chase, they're looking to expand to launch in the UK. They should buy Monzo or Starling Bank. I wrote it like a few months ago. So last month, Goldman Sachs made an investment into Starling Bank, a challenger bank in UK. So I think that there's going to be acquisition consolidation in Europe. It's already starting. Some of them are just bankrupt already. In the US, it's too recent. Not everybody is going to be a winner. The top one, they're going to stay. The second players, I think they're going to move on a niche market, very niche product and market. They're not going to expand to the full set of products.
Gotcha.
Hey, Arcady, if we get, it's Eric, talking about Agora specifically, as you said, you're not looking to replace the core, you're working with the core. Can you talk more about how Agora, if you will, allows these community banks and credit unions to operate, your functionality and their core, and the opportunities and challenges that go with that?
Okay, so the way we could work theoretically, so I'm going to kill another myth about the API and the integration with the core. because there's a lot of buzz about it by saying if you fintech an API and it can easily integrate with the core, but step back. So the way we project ourselves, it's like the package product, the pre-built, so the teen account and the small medium business, and next year we'll launch a third pre-packaged product, which is for the elderly account. We strongly believe that there's today a lot of buzz about teen banking. I'm going to be very honest with you. There's no money to make on teen banking. I'm not talking about Agora because we are a B2B player, but all these B2C player, there's a teen account, there's no deposit, there's no transaction, and the only hope is to convert and to keep them as a full bank client, which is hypothetical. So if we're talking about pre-packaged product, it can be standalone from the legacy core. So almost no integration. So to talk about Finaster. So Finaster is an amazing platform. I won't even call them legacy core because they're very modern as a core. But they took our product. So the teen account was announced live in production last week, and the SMB should be in the coming weeks. So it's super light integration because Agora is the core. And what we need is just a global balance and to move the money from one account to the other, and that's it. So super light integration. So what we did with Finaster, we can do with all the other core, Jack Henry, FIS, FISEB, and we already have some initial discussion with them. Option two, it's like they're looking for, I'm talking about community bank, they're looking for single features. So I'm going to clear a myth. All the cores are saying that they're API friendly, that it is integrate. It's true with Finaster, not with the others. It's like, I'm sure if you talk to the cores, they will say that. Talk to the banks and clients, credit union, they will tell you it's not true. So there's different way to do it. So API, we API, so it's great if there's an API we can connect. There's two other way, and it's what we were doing us 2 decades ago, and it works amazingly well. It's you create a second database. So one is the master and the other one is the sister and mother, or you can do in a batch mode. So there's not everything is API. So you can integrate with the different layers. Option three, you launch a new bank, complete bank. There's no co-integration because it's a parallel core. So to be in one sentence, API is the best way to integrate with the core, but not everything. There's different way to do it.
And for Agora, do you have all those options?
Yeah, we can do all of that. We can do the pre-built. It's the teen and the SMB, so it's already live. You can go on Google Play and find it on iOS. It's available through Testlight. The option two, which is single features, you can go to our website and check our API catalog. You will find all our API features, single features, and we have much more coming. And very important, I'm not giving any name, but just to compare ourselves versus our competitors. Most of them are still building their platform, coming soon. I'm not talking about the features here when I'm putting dates. These are features, but we have already the technology. So we're just deploying our microservices. So if you take a look at our competitors, the new players, it's on their website. They will say they still have certain components. I'm coming back here, certain components here, and the rest to be built. Sorry, here. So we have everything already built. So just go to our website and you will see our API catalog.
So let's say I'm to keep it simple, I'm a credit union or community bank running a Finaster core. How long will it take me to put up your team banking or your SMB?
Very good question. So if you're today on Finaster and you're interested by our team banking and small medium business, we could deploy 5 weeks because we're already integrated with Finaster. We're coming with our user experience, we're coming our compliance, we're coming with everything, and in 5 to 6 weeks, what you have is a solution which is with this branding. It will be called a Tinspower. It will be that if a community bank or credit union, they want to put their name on the card on the app, it's 2 additional weeks. if they want to have the app customized with different user experience with different products or they don't want to have the same products that we offer, they want others. It can be up to 15 weeks because it's a fully customization. But if a credit union, they say, we want it, we're fine with this, and by the way, we will provide marketing material, we can provide a neutral brand, a website, transactional, non-transactional, we can provide full features, including not just the user experience, but even marketing. If it's they want just to have a Tinspower, neutral brand, and just have their name on the card and on the app in 6 weeks. This is when we integrate it with the core. So Finaster, 6 weeks.
And is that integrate? So if a community bank has an online banking offer already, is this end up being a separate web page, a separate?
Yes. So the product is separate. What we can do, we can embed. It's a token on depending on the web provider on the existing digital banking, but basically with a token we can SEO token we can reroute to our website and our app. So it's neutral. So you an existing client from the credit union community bank, you go to the existing app or website, you click, there will be a Credit Union of Alabama teen banking on their app or website. It will reroute to our platform. So two options: either it's our user experience, which is fine because it's a separate product, and this is 5 to 6 weeks, or they want to separate, so it will take the time to customize per their requirements, so either the design, or they can do just a screen up and just give it to us, and we can implement it over on the top of our API platform.
And how long? I know it's hard to say. I got on the calendar to answer my question, but because I want to ask you, how long would it take to integrate to an FIS or a Jack Henry core? I know that takes forever because you have to get your slot in there. It's like air traffic control. You have to get your slot. But once you've got your slot in there on their landing strip, how long would it take you?
So that's a good question. It's like to integrate with Finaster, it took us 3 months, and that's fast. That's fast, not because we're good. We are good, but because Finaster is a very good core provider. They're one of the most advanced on the tech side, and we're working together. So it was super easy, super straightforward. With the other core, by the time they do the due diligence, by the time you do the analysis of the API, by the time you integrate, by the time you discuss, it can take, just to talk about the integration with the core, 1 year.
Okay.
And once again, it's not a dependency on Agora. It's an industry dependency on.
No, it's the industry process. I got it.
Exactly.
But once you went through all those preliminaries, it would probably take you 3 months with.
Once we integrated with the core, I told you with Finaster it took us 3 months. To launch a product, it's the same timeline. That means if it's no customization or light customization, in 5 to 7 weeks, any credit union community bank can have these 2 products up and running, including the app website. If they want more customization, we're already done with a core provider. It's more like, what do they want to add or to take off as a product, and what customization they want. They want a different debit card design. This is a separate project.
I understand. Thank you.
Okay.
Hey, can I ask a quick question?
Of course.
Please.
Yeah, so this is Michael, connecting with you guys from North Carolina, from Raleigh, North Carolina. So I'm working on a kind of like a remittance idea, but it's pretty different from what's out there in the market. It's kind of like a peer-to-peer. So I'm wondering, like, do your organization, like, do you partner with small fintechs in terms of like licensing? I don't know if you understand the question.
No, can you repeat it, please?
So I know like to do like a remittance, I mean like exchange, sending money from United States to a different country. I know you need a license. So I was asking like, I know some other banks, some banks, you can partner with them, and instead of you applying for your own remittance transmitter license, you partner with the banks and you use their own license. So I don't know if your organization do the same thing.
Yeah. So as you see, if you see the screen, what could be embedded in a modular banking platform? One key component in the future for modular banking is the FX, and it's the FX because it's where you make money today. You can make money on the deposit, you don't make money. Lending, it's getting complicated, even on the lending. FX, it's where you make a lot of money. So theoretically speaking, that's what you should find in an advanced modular banking platform. So now to answer to your question. Us, for example, we're right now finalizing a partnership with a leading FX platform, and we're going to embed them into Agora's boutique. And basically, we're going to have a solution of a fully digital remittance, in, out, FX, and even spot and contracts, forward contracts. Regarding the regulatory part, they're different. First of all, it's like you have remittance on, you have two sides, US and outside the US. There's a few ways to do it. One, in the US, you need to have a license of a money transmitter, or you can be a bank. And outside the US, either it's sending money to a bank or to an agent, or to send to a digital wallet, which is part of the platform. I'm not going to elaborate, but regarding the US, we would be able to receive money, currency, or to receive in dollars, either through a bank account or through a digital wallet. Through a single app, do the conversion at an amazing price, and then to send the money into formats, either to a bank or to certain countries who will be able to have a kind of, under our umbrella, a local digital wallet. So countries like Canada, like UK, Europe, Singapore, and other countries.
Great.
I think that was a question, right?
Yes, thank you very much.
So we've got just a couple of minutes left. So if maybe we have one more question, we might be able to fit that in.
So I just want to add something, a question. Feel free, there's a question. It's like there's a lot of players that are doing a bank as a service. The key thing, it's like, is it just replacing what exists, or bringing another feature, or bringing new products? So we're coming with a two last version, because we're coming, when I say we, it's the team and our structure, we're coming from the industry. We're not, I was on the B2B side, I was also on the B2C side, and we're coming with the same mindset. So we're fully B2B, but we're coming also with a mindset of B2C by saying, we know what the end users, they may look for. We know how a bank is working, and we're coming from this world. So that's why we're coming on the tech side, but also on new products and new features.
Great. Well, thanks so much, Arcady, for your presentation. Thanks to everybody for joining. We will reconvene about a month from now. If this happens on the second Thursday, so July 8th. So mark your calendars. Great to have you all for the C-Suite FinTech Advisory Workshop Group, NYC, and of course, NYC and beyond, I should say. So thanks again, Arcady. Thanks to all for joining, and it was a great pleasure to have you all with us.
Thank you for having me, and thank you everyone for being here. Take care. Bye-bye.